referring to you now concept of e-way bill, which is very important not only from examination point of view but also from the practice day-to-day activities of a taxpayer under GST. Need to know the e-way bill concept if he is a supplier of goods. For a supplier of services, e-way bill concept not applicable. Supply of goods, now across the India you can supply and there won't be any entry tax, there won't be any octroi. These are all subsumed under the GST law, resulting that one nation one tax concept to bring the true spirit of one nation one tax. If the goods are moving from Kashmir to Kanyakumari, freely can move without any hurdles in between when you cross from one state to other state. But government wanted to have the control on such movement of the goods, especially interstate level. With regard to intrastate, for a smallest distance up to 50 kilometers within the state or within UT, movement of the goods as intrastate, their e-way bill in general may not be required. But e-way bill is required, especially in the case where if the goods are moving from one state to another state, from one UT to another state or vice versa, as an intrastate supply, one should adopt, one should have to have e-way bill if the value of such goods exceeds rupees 50,000 rupees. E-way bill is required to be generated for transportation of goods by all modes of transportation. It may be by road, it may be by air, it may be by vessel or through sea or by rail, as the case may be. Goods transport by GTA, goods transport by air cargo, goods transport by vessel or ship, as the case may be, as a cargo vessel or a rail goods train transporting the goods, where the e-way bill is mandatory if the value of the goods exceeds 1,000. Especially at interstate level. What about intrastate? Yes, intrastate also nowadays the state governments under their respective GST Act, they have been made into mandatory to have e-way bill, to have the control on movement of the goods within the state as intrastate. In general, within 50 kilometers smallest distance of transportation, e-way bill may not be required in the case of intrastate supply. Now, in the case of interstate, value of the goods exceed rupees 50,000, then e-way bill should be accompanied along with the transport, whatever may be the mode of transport it is. In your given example on the screen, if you see, M Limited Mumbai consignor supplying the goods in particular vehicle by road, interstate supply to C Limited Chennai consignee, recipient of the goods. In that case, if the value of the goods exceeds rupees 50,000, there must be e-way bill. There are cases where e-way bill is mandatory even without referring the value of the goods, irrespective of the value of the goods. In the case where the goods sent by the principal to his job worker at interstate level, goods sent by the principal to his job worker on job work basis at interstate level, irrespective of the value of the goods, e-way bill is mandatory. Further, handicraft goods which is transported at interstate level, yes, there must be accompanied along with the e-way bill. E-way bill made mandatory. Somebody may ask, sir, e-way bill is mandatory but not adopted the e-way bill, not accompanied e-way bill. In that case, sir, in that case, that goods are liable for detention and seizure and further liable for confiscation also. Section 130, directly confiscation of the goods may take place. If the goods want to be released, you have to be pay here fine fine in lieu of confiscation as referred under section 130 of the GST Act. Therefore, better to have the e-way bill where it is mandatory. In what circumstance mandatory, how the e-way bill should generate, and modus operandi, the provisions with regard to the e-way bill. Now I am explaining to you in a simplified manner as follows. E-way bill is required if it is so. Form GST EWB01 should be fill up part A and part B and upload separate e-way bill portal. It is not a GST network portal. Separate e-way bill portal is there. There it should be upload part A and part B containing in the form GST EWB01. Part A information filled by the consignor or consignee as the case may be. The supplier or the recipient of that goods should be filled part A, containing the details in part A. Details of the consignor, dispatch from which place, billing to whom, and bill of supply if any, delivery challan if any, the details should be mentioned, bill of entry if any should be mentioned, invoice details, GSTIN of supplier and recipient should be mentioned along with their addresses, place of delivery with the PIN code should be mentioned, HSN code, harmonized system of nomenclature must be mentioned, namely invoice details should be reflected in the e-way bill also, number and date, invoice number and date should be mentioned, value of the good should be mentioned, reasons for transportation also should be mentioned, and etc. The information relevant in the invoice is the information should be also incorporated in the e-way bill, which is part A information. Part A information is to be filled up by the consignor or consignee of the goods, maybe supplier of the goods or recipient of the goods as the case may be. Form GST EWB01. Part B, content. Who has to fill up? What details it is? Part B will be filled by the transporter. Upon furnishing of Part A of e-way bill, a unique e-way bill number shall be generated which shall be valid for a period of 15 days for uploading of Part B. Part A information filled up and submitted in the e-way bill portal form GST EW01 does not mean that e-way bill generated. E-way bill is generated only when the transporter filling the Part B details and uploading it, then only e-way bill generated. In that case, to fill the form B of EWB01, time limit is prescribed 15 days from the date of uploading Part A information. Part B containing vehicle number of the transporter, lorry receipt number of the transporter, lorry receipt date, distance to be travelled, vehicle type, transporter name, address should be mentioned in the Part B, and fill that Part B data and submit, upload, then e-way bill generated. Further, my dear friends, there is a concept called as consolidated e-way bill. In what circumstances concerned e-way bill comes into picture means, if a supplier transporting the goods individually and the value of the goods is lesser than rupees 50,000, but such individuals or such suppliers, such consignors who supply the goods in the transport in a particular vehicle is individually consignee transport of goods value less than 50,000. However, on accumulated basis, carrying the goods in that vehicle is exceeding rupees 50,000. In that case, clubbing two or more invoices values together exceeds rupees 50,000. In that case, there is a need of consolidated e-way bill should be generated by the transporter. How it should be generated by the transporter means, EWB01 Part A information of consignor or the consignee is available in the invoice, but the consignor or consignee will generate the Part A because he says that my value of the goods is only rupees 5,000. Why should I issue the e-way bill? My value of the goods is rupees only 40,000. Why should I issue the e-way bill? So individual consignees who are supplying the goods value less than or equal to rupees 50,000, thereby those people are not generating the Part A. Therefore, it is the responsibility of the transporter while generating the EWB01 Part A information should be filled by the transporter using the information of the invoice. Then Part B information, obviously the transporter knows that transporter information will be filled up. And like that, EWB01 for individual consignments prepared by the transporter, all are subsummed in a particular place that is called as consolidated e-way bill. If consolidated e-way bill, if you knock the doors of the consolidated e-way bill, it will open and pop up the individual EWB01 of each consignment. Referring here, consolidated e-way bill, individual consignments not exceeding rupees 50,000 and the aggregate of the consignment value exceeds rupees 50,000, generate the e-way bill in the form EWB01 on the basis of the invoice, and may also generate a e-way bill which is called as EWB02, known as namely consolidated e-way bill, which is in the form GST or GST EWB02, who has to be generated by the transporter. EWB02, if you open that, individual EWB01 will be pop up with the Part A, Part B information. Value exceeds rupees 50,000, go for generation of e-way bill, being a considered consignee when transport the goods off by road, by vessel, by air or through rail, as the case may be. In that case, the value of rupees 50,000, how we should compute, what it includes, what it excludes, is we have a clear cut information, you have to follow it. Meaning of consignment value of goods exceeds 50,000. How to compute the value of rupees 50,000 means it includes value as per section 15, valuation what you derived by following the section 15, subsection 1, 2, 3, followed by section 15.4. Either it may be transaction value basis or the transaction value may be arrived by following the valuation rules, as the case may be. Value as per section 15 should be incorporated in the value of rupees 50,000. Declared in an invoice, a bill of supply or a delivery challan, as the case may be, issued in respect of the said consignment. Bill of supply generally supplying by the consignment supplied by the composition scheme opted taxpayers. If so, in that case, bill of supply they are issuing, in that case, consignment note, that particular bill of supply value, if any shown in the bill of supply, should also include in the value of supply for that consignment of 50,000 exceeds or not exceeds. Further, important point, highlightable point, mind-blowing point, CGST, SGST, IGST and GST compensation cess charged if any in the document also be included. In general, my dear friends, wherever you come across computation of the value even for 150 lakhs, 75 lakhs, 50 lakhs for composition scheme or for the threshold limit for registration, 10 lakhs, 20 lakhs, 40 lakhs, as the case may be, wherever you compute the values, in general you come across stating that if any GST taxes is there, that value should be eliminated. Tax and duty, the tax alone should be eliminated. GST taxes should not be clubbed together while computing the value of your threshold limit for registration or your threshold limit for composition scheme, what not. But under the e-way bill is considered while aggregating rupees 50,000 for your value of supply, that includes GST taxes, is a mind-blowing point here. One should understand. What excludes from the value of rupees 50,000 means value of exempted supply of goods where the invoice is in respect of both exempted as well as taxable supply of goods, namely a particular invoice cum bill of supply issued. In that case, where the exempted value of the goods should be eliminated while computing the value of supply of rupees 50,000, exceed or not. So then you said in the inclusion list, bill of supply is included. No sir, bill of supply will be issued for exempt supply. Correct Baba, I agree, but does not mean that the supply supplied by the supplier not paying the GST. See, if you refer the composition scheme leave SSC, composition scheme leave SSC is supplying what? Invoice, tax invoice or the bill of supply. Bill of supply only. Tax invoice he won't issue because he has to pay tax from his pocket. He should not charge the tax in the invoice. Therefore, bill of supply. Bill of supply for his supplies free from GST or what? Taxable goods attract 18% GST, where he is going to pay only 0.5% CGST, 0.5% GST, effectively 1% GST. In that case, he is paying from his pocket. He is issuing what? Bill of supply. In that case, that value should be added in the value of supply of rupees, whether it is exceeded or not exceeded, to generate the e-way bill. Which bill of supply value should not be included means, as per the notification, supply of goods which attract altogether nil rate of GST, wholly exempted. Nil rate of GST, exempted goods value should not include in the value of rupees lakhs is the meaning of that. Further, my dear friends, explaining to you the examples here. Look, example 1. Let us have example 1 first. In the given case, goods transporting by road. GST on goods transported by road. That means what they are supplying is taxable goods. Supply. Who supplies? Mr. P, registered person from Punjab, supplying the goods to Mr. G, Gujarat. From Punjab to Gujarat, interstate supply. Here, what's the value of the goods? Only 45,000. But they said in the bracket, exclusive of IGST 18%. While computing value of 50,000 should include GST taxes is a phenomena, is a vital point, mind-blowing point under the e-way bill concept. Therefore, value of the goods 45,000 should add GST 18% thereon. You should add 18% GST. How much it comes? On rupees 45,000, 18% GST is comes here 8,100, which is to be added. Thereby you get here 53,100, meaning thereby the value of the goods exceeds rupees 50,000. Be careful here, while computing that 50,000 value, it should include, while computing rupees 50,000 value, it should include GST taxes. After including GST taxes, if it is not exceed rupees 50,000, then e-way bill not required. In the given case, after inclusion of the GST, it exceeded rupees 50,000. As a result, either consignor or consignee should generate EWB01 Part A and followed by EWB01 Part B within 15 days from the date of uploading Part A information in the EWB01 after uploading in the e-way bill portal. Within 15 days, EWB01 Part B should be filled up. If not filled up, 15 days are expired, then that Part A information will disappear and you have to again raise Part A information. So, in the given case, example 1 very clearly stated that the consignment value will be 53,100 after inclusion of the GST. Hence, e-way bill is mandatorily required to be generated or issued in the given case. If the goods are accompanied only the tax invoice or it may be e-invoice, but e-way bill not there, the goods are liable for confiscation. Section 130 of the CGST will come and stand here. If the department detain that vehicle during transportation, during transit, if the department squad has been detained, identify that, commissioner will impose the confiscation of the goods. The goods will be taken over by the department. If you want to release that goods, if the department accepted your what we can call payment of fine under section 130, in that case a fine in lieu of confiscation will be provided. After paying the fine, you have to release that goods. Otherwise, that goods will become the goods of the department. Not only the goods, my dear sir, be careful. Transporter also be important to note. Hey, Mr. Transporter, your vehicle also will get confiscated. Not only the goods. Goods only will take, transporter you can go. They won't say. Goods and vehicle both will be confiscated. Couple of months before, one of my beloved student who is a qualified chartered accountant practicing glorious manner in the city of Chennai, he called me over phone, sir, one of my client vehicle has been confiscated nearby Coimbatore highway. Can we release the goods or anything is there to overcome from this difficulty? I said, only thing is you have to pay fine if the department permitted you, accepting you to pay fine. A fine in lieu of confiscation you have to pay and release the goods, no other way. He asked me, sir, department has the right to confiscate like that? Yes, e-way bill has such a power. Section 68, read with rule number 138 series very clearly says that it is liable for confiscation. Not only the goods but also vehicle.